Lars, welcome back to the show again. Thank you so much for taking the time.
Well, thank you for taking the time too.
Of course.
When was the last time I was here? Do you remember?
I think it's been a couple of months, that's for sure. Early 2024, I think.
Yeah, so a year.
Plus.
Mm.
What has happened since? Maybe a big question, but maybe 2025, how fast has it gone? 1 month left now of 2025.
Too fast. It's, it's kind of, we did have quite a volatile 2024, but I think, after Trump's inauguration, I think the pace picked up quite a lot. So a lot of policy changes. To the point, actually, at the beginning of the year, you almost get paralyzed. Not from a kind of a company strategic point of view, because we do a very simple industry. We pick up oil, transport it, and deliver it. And it's actually been a blessing being a part of a working environment where we actually have a job to do every day. But of course, following everything that's been kind of coming is it's been quite a job.
Yeah. Is it like a running joke that there's been a lot of hours in Excel and then things change again? So a lot of hours have sort of been wasted by analysts, price, all the tariffs initiated. There's been a lot of hours that really didn't plan out.
Absolutely. And I think kind of, people have tried to, okay, so now this happens, how will that affect the industry? And now this is going to happen, how will that affect the industry? And, kind of come May, June, I think we started. I remember it's probably June because I was in New York meeting a lot of US investors. And then, let's have a step back and see what actually happens rather than try and predict what, eventuality or what policy change may affect the market. Let's actually see it in action. And, this kind of taco expression came into force, right? And then, of course, it's a complete waste of time to analyze something until it's actually signed and effectuated. So,
definitely. So we're gonna cover a lot of topics today, but let's start extremely broad. Peak oil demand isn't so certain anymore. I saw the latest report. You've been in this game for many years, decades. What is like the common knowledge today? Because we just push the peak further and further. Is that a subtle fact, or is that something we just predict, that peak oil is now further into the horizon?
I think, yeah, and I'm to quote the CEO of Exxon, hydrocarbon is such a marvelous molecule, right? And it's actually being used, first of all, the energy density, it's only nuclear that can match it. And it has so many purposes globally. We've argued for a long period of time that oil demand has a tendency to follow population growth, and it's pretty smack on actually. And then of course, the incremental growth comes from actually people moving out of poverty to become consumers, which is something one actually should regard a good thing. I think what surprised most people is that, because when I saw DNV's first 2050 vision, their energy roadmap, I was surprised on kind of how quickly the renewables was going to come into the market, and how quickly adoption of renewable was going to be. And it looked really bearish, actually. It kind of, we're going to peak somewhere mid 2030, and then we're going to decline. But what has actually happened is the energy demand globally has increased at such a tremendous pace that oil's relative market share has remained in volume. It's reduced in percentage because the pie has just grown quite a lot, and I think it probably tells us that oil and non-sustainable energy, hydrocarbons, is probably a bit more sticky than people anticipated. But it's basically because the pie is growing so fast. When I was at a presentation back in September where a fun fact that China's electricity use for computing is now larger than Great Britain's electricity use. So it just tells you how, and I'm not blaming all on AI, but I'm blaming on kind of population growth, people actually moving a little bit further up the consumer chain, and of course this technology change.
Yeah, just 2 points I want to highlight the things that you're saying, because one of the people I follow a lot in Norway is Torbjørn Kjus, chief economist in Aker, been following the oil markets for decades, and he has 2 points. One, that let's stop talking about energy transition and energy addition, because energy just compounds, so it makes sense to talk about the general addition in energy. That's point one. And point two, he said that in Europe, the oil demand has been stable for 10 years, but the initiatives from EU has been enormous. That says something about the stickiness, right? All those initiatives, demand, stable. And he says if you're going to follow the EU, they're going to cut it in 15 years. That seems very unlikely. So maybe it's just like a common sense to think that we have to sort of think a bit newish in this environment. One would assume.
Yeah, but I also think a lot of people have underestimated, kind of the hydrocarbons part of the global economy. Kind of the easy target is, of course, environmentalists protesting in the Yellow Vest, which is made out of petroleum. So it's kind of pulling up the umbrella, buying yourself a new iPhone. When you go to the hospital, the hydrocarbon is almost in everything. And as long as we have we as a race prosper and actually evolve, we lack to actually replace this. Of course, there's a lot of great initiatives for that, but the volume you need is just tremendous.
Exactly. So the narrative, if you're looking at Twitter, looking at the markets, from my perspective, the narrative is that too much oil supply. Many different reasons. Can you frame it in? Why is that the hottest topic right now? That it's just simply too much oil on the supply side?
No, but I think it's also probably one of the bigger questions in our industry, and it's very difficult to answer. If you look at IEA, EIA, OPEC, all the reporting agencies and the smart banks, they're looking at us to build tremendous inventory for the next year. To the tune of 2.5 to 3 million barrels per day for 2026. But with that, the oil pricing, the curve, is not showing any signs of that at all. And actually that we have, prompt crude is referred to in trading circles as flat price, just the flat oil price. Not that it's flat by any means, but it's not compounded by spreads or anything. So, that we're having, $60 crude-ish, now is, is very strange. Looking at the oversupply we, in theory, have. Looking at the oil in transit, which is at record highs. So there's like a massive pile of oil waiting to find a home, and then oil price can still perform, and the oil curve is completely flat. What we should have had, for those who are not experts on oil trading, we should have had a contango structure. We should have had cheap crude in the front, which gradually, with the price increase, as demand eats up the oversupply. That's at least the theory, but we don't see that in the market. And I think this is one of the larger kind of question marks. And the oil price itself, it's a sum of what people think, right? And in that sum is some part to disruption of Russian exports, to some parts what's happening in Venezuela, to some parts how stable is the Middle East. So basically everything is compounded into that price discovery. Whether if Brent is supposed to be worth $62 or $65 or $58. So I think it's just symptomatic of, it's very difficult to know what weighs the most in this picture.
So what is the perspective of OPEC? They had a meeting yesterday. What is their main concern? That the price is too low, that they want to have it higher because that's usually how they like it, or that they can't trust the production volumes, or
Well,
several topics on the agenda probably, but...
Well, we spoke about the busy year. So this year, OPEC has actually wind down the cuts or rolled back the volunteer cuts of their production, and that's had the limited effect on exports, all up to September this year. So there's a difference between price is probably made around exports. How much oil is actually coming into the market. Production increase that doesn't kind of hit exports doesn't really matter. It's a more domestic thing for the countries that export oil. But what kind of OPEC Middle East didn't start to materially increase exports until September, October. But kind of the big narrative is around, are OPEC motivated by price or motivated by market share? And what people are starting to turn towards now is that OPEC are probably more leaning towards market share than price. But having said that, the biggest producer of them all, Saudi, needs close to $90 for their budget to balance, right? Or some even argue more. So $60 doesn't really do much for them. But for the liquidity of the country, that they can actually export more volume, that of course helps. If you can export 7 million barrels instead of 6, so you basically get more liquidity into the state's coffers. But I'm kind of leaning towards that OPEC probably realize that they need to maintain their market share, and then you probably need a marginally lower oil price, not to stimulate future production to come out of, for instance, the US.
Because in this story, we've seen great production from Guyana, US, Canada, pushing this as well. That makes it maybe more complicated to sort of maneuver the market from the OPEC perspective.
Yeah, and I think US is a good one, because everybody who's been advocating for the fall of US production have been wrong. And actually most have. Most have looked at the sensitivity between the production cost and the kind of achieved price in the market. And if you look at The Landman, for instance, the great TV series, which actually came out with a new season now, I think the magical number is $67 or something like that. Or maybe it's 70. This is what Øystein always remembers to the point, right? I'm more generalist. But even though pricing has been below this target, we've actually seen a lot of oil coming out of the US, and the nodding donkeys and the wells are still pumping. I think people are underestimating the efficiency gain that this industry has seen. So even though we don't have the DUCs, the drilled and completed wells, the existing wells are actually able to produce much more than people anticipated. It's been exactly the same in the North Sea. If one looks back, a couple of decades, people anticipated depletion rates in the North Sea to be quite dramatic. They didn't occur at all, basically due to new technology, horizontal wells and so forth. But it's impossible to know how much can you tap out of the US shale. But of course, if you can tap more barrels out of a well that's already drilled, already done, everything is kind of sitting there. Of course, your break-even cost is not the 70 or $80 that they are said to need.
Definitely. So for new viewers and listeners who are not into shipping as much as you are, of course, oil price related to Frontline earnings, what does correlation mean, causation? Because, the price, just one factor doesn't necessarily drive earnings for Frontline. So historically, what is the strong correlation do you have? If the oil price is there, that should be good for Frontline, or not, no correlation, causation at all?
There is, of course, some, but I don't think it would give you any kind of statistical meaning. The thing is that a low oil price because demand is bad is not good for us. A low oil price because supply is high, that's very good for us. The largest costs we carry, as running a shipping operation, is the bunker fuel. And of course, fuel prices are highly correlated with the crude prices. And if crude prices are low, our cost is low. So we, so you could actually put that frame it together. Whereas, kind of oversupply, but obviously not oversupply like we saw during COVID, but oversupply to some degree, creating low fuel prices for us, but also large transportation needs. That's kind of the perfect recipe for Frontline.
So in this market, geopolitics never sleeps, of course, and now there's a lot to talk about. But just the latest stories were, 2 Russian vessels being taken down by Ukraine drones. We saw an attack on the Caspian Pipeline Consortium, which I think, is responsible for 1% of the oil being distributed. Big question, of course, but geopolitics, the things you've seen, you can tie it into the shadow fleet or dark fleet. But this picture, it's quite, interesting to say the least.
Well, it's, to say the least. I think kind of, and this is not going to be like a 2025 kind of top 10, but if you're going to do a 2025 top 10, I think right at the peak there would be that we actually had an Israel-Iran war with US bombs landing in Iran and a fairly manageable volatility in oil price and, freight that spiked for virtually 5 minutes and then everything went normal again. Because I think for any oil trader, that conflict which has been lurking, and there have been various theories of how that playbook was going to kind of be, and then we actually have towards the end of June this year, like a full-blown Iraq invasion kind of operation from the US into Iran, and mind you, US is Iran's kind of arch enemy above all, and that kind of fizzling out. That is something I did not. I didn't have it in my kind of deck of cards. What I think happened with that, because I was probably not the only one surprised how kind of calmly that ended up. I think it kind of diffused a lot of political risk. So people that were willing to put a lot of kind of price risk due to political events into oil, for instance, they suddenly had to basically recalibrate their model. Because when you can have an event like that affecting crude that relatively little, is that should have been a $150 crude event. It should have been.
Yeah.
But just to get it back to where we are now, I think kind of, I'm obviously no politician, but what's kind of happening between Russia and Ukraine, seemingly Ukraine is struggling on the battlefields. We've seen the sanction regime put onto Russia is not really bearing the fruits that was expected. And
because it's too hard, or?
No, because it's too soft.
It's too soft, yeah.
And then
were too hard to manage to put those sanctions in, or like?
No, it should have been really easy. If you did like Iran-like sanctions, just say the Russian molecule is now off limits to EU, to US players, to whatnot. But then you would be exposed to the political cost of having high energy prices, which no politician would vote for, or it would be a career-ending kind of a decision to make. But so I think kind of Ukraine, their strategists potentially have seen that, okay, we need to take the matter in our own hands. We need to make kind of because the oil sale of Russia is feeding that war machine. And there's no two ways about that. And, that's why they're going after refineries. That's, of course, to hurt Russia domestically. If they have a cold winter now and a lack of diesel, it's going to be very difficult for Putin to stay popular. But also on the exporting side, trying to hit kind of terminals in the Baltic, try to disrupt this Black Sea business. I think it's basically a long-term strategy to try and limit kind of their income streams.
Definitely. But given the experience of 2025, it's just a lesson to don't predict so much geopolitics.
No, because it plays out completely different than you believed, and I think if we rewind to June, I think nobody expected Iran to give the concessions they did, and to basically agree to let's agree to not to disagree, and then we'll stop kind of any warlike action from here on in. I think Iran was probably at a breaking point, and I would be surprised if Israel wanted to push further. But I think the world was probably better off having a stable, some sort of stability in that very, very key region of the world.
Is there an easy answer into the question of how much has the dark fleet affected the earnings for the compliant fleet, or is that just don't do those calculations and?
No, it's kind of, I think eventually we're going to be paid for not partaking, not that we could even, we're stock listed companies, we have lenders, we have insurers and so forth that we kind of want to adhere with. But I think, some parts of the tanker industry has had a screaming bull market now for the better part of 3 years, or close to 3 years actually. I think, or my hope is that, we who have stayed compliant are going to reap the benefits for that in the long term after, at some point here, the table is going to turn.
Definitely. So let's take the transition over to Frontline. What is you just did an investor call, probably several ones. What is your key message? You said that this feels like an old school bull market.
Yeah.
Why is it an old school, not a new school? Can you lay the picture a bit?
No, because at the end of the day, it's supply and demand driven. And but more notably, the last cycle, which we talked about endlessly, the period from 2003 until 2008 or 2 to 9 or whatever. That was a demand-driven story. Ever since China joined the World Trade Organization, and China's became a fast-growing economy, their kind of oil demand growth surpassed anybody's expectation. And of course, the fleet was not there to cater for it. So you didn't have enough supply of vessels to manage their increased demand of oil in particular, and coal and iron ore and every other commodity under the sun. But this time around, ever since kind of the ESG came into fashion and the non-sustainable energy businesses and so forth were targeted and looked upon as a bad investment, we've had this kind of vacuum of investing in the industry that we represent, an industry that a lot of there's a lot of other shipping segments that have seen kind of some of the same, and so we are kind of still to this day underinvested in transportation, and particularly so for oil. If you look at the regulatory framework that is kind of around us, we're trying to reduce emissions and so forth. At the same time, we have the oldest, probably most inefficient fleet we've had for 25 years. And the average age is important because, it is still so, and this is a fact. This just came up in the investor meeting I had. Well, is this really a limit at 20 years? Wouldn't people just shift to older vessels if they can? And the entire kind of oil trading complex is not set up for 20 plus tankers. It's and I think the proof is in the pudding. We've done voyages that pays $130,000, $140,000, even $160,000 per day. The charter has not gone to 20 plus. they continue to fix modern vessels. So, and this is kind of, it's logical, because in that oil trading chain, there's a lot of pieces you don't control. Even if you're Exxon or you're Equinor or whoever you are. First of all, the most important thing when you move oil is optionality. Even though the cargo may be destined potentially to your own refinery, where you also own the terminal, you know, none of these vessels are fixed without options. Because if something happens to oil price, you know, in the next kind of 60 days until that oil arrives at the refinery, or 90 days for that sake, you want options. And then if you have a 21-year-old vessel, you basically lose 80% of those options, because there's so many other terminals that you don't control that will have these limitations. But you can't even start there, because trading oil is a margin game. And, you know, a 20-plus vessel, the insurance on the cargo will just go through the roof and kill the margin in the first place. So this is why you know, kind of advanced oil traders of this world will tell you that the only thing they can use a 20-plus vessel for is storage, potentially. And then they have kind of a long-term plan for the vessel. Or, of course, if the vessel is just going to go shuttle between A to B, we've seen this in India. You know, so you know, kind of if it's an Indian flagged vessel, it can actually live until it's 25. But that's for designated trades. You know, that where the logistics are under control. You know, they know exactly where it's going to load and where it's going to discharge. No, so and then just to get back to this old school bull market, you know, if you put into your model that tankers actually don't trade in any market really, well, at least in the compliant market, after they're 20 years old, we're going to have a very limited growth, fleet growth for the next 2-3 years. We've actually had a period of negative growth. If you look at vessels, the population of vessels below 20 years, that has been negative for VLCC since 2021. For the other, or for all the asset classes that at least Frontline are trading in, it stopped growing sometime in September 2022, and it's actually reduced ever since. So with this and the realization that oil demand is probably not going to stop growing, then we're going to be short tonnage. We're not going to be short oil, as we just discovered. We're not going to be, you know, kind of the product is going to be transported, but we're going to be a little bit short on the shipping side.
But is there, in your opinion, a reflection or something to say that, you know, expectations for this has been very high? So if you look at stock performance, that it's hard, it's almost a bit of a dangerous narrative to have, because expectations are so strong that sort of these fundamental stories doesn't really weed through the stock price, or?
Yeah, no, it's a very good question. I don't have the answer, but you know, we saw the Frontline stock price rally in 2024. It just rallied straight through, or not through, but I think we had a couple of points on the tape where it's above $30 or 300 north of 300 kroner. And then, of course, we had an awful second half in 2024. But I think that rally was priced on anticipation. There's a lot of anticipation in the market. You know, everybody understand this, you know, kind of structural long-short story. You know, we're long oil, or not long, but you know, the oil market is going to persist, but we're potentially tight on the shipping capacity to actually freight this. And you know, it's just like being in a city where lots of people want to take the taxi, and the number of taxis are just gradually reducing every year. So everybody understood that, and that kind of culminated then in a pretty awful fall of 2024. Now come 2025, where I would potentially say that there are more pieces, you know, falling into place. People are reluctant to buy into it, and maybe they just want to see, you know, kind of a more solid proof in the pudding. They actually want cash into their dividend account before they're willing to commit more cash into the stock. I think it's difficult to believe that we'll have VLCC rates hovering $100,000 per day for a longer period of time. Even I find it difficult to believe that. But that we kind of potentially structurally have, and I'm probably going to jinx it now, but that we structurally in this market have, turned a corner to some extent. I feel kind of, I feel I have some support for that claim, but who knows?
Yeah, I mean the markets is incredibly dynamic, I say, and it's so hard to predict anything, right?
Yeah.
So, I mean, you talked about it a bit in your last couple of points that there's sort of this under-investments in the space for several reasons, ESG being one. And I think one of the first conversations we had, you picked up the Philip Morris case. Also a pretty, underinvested industry in some sense. And can you explain the Philip Morris case? And then second leg, is it okay for Frontline to become the Philip Morris case of shipping? You have a shop that many people don't want or wish that didn't exist, but it should deliver strong returns many, many years into the future. Is that a hard claim?
Yeah, no, but I think kind of the Philip Morris case is it's more a case about realism. It's a case about, we all want the world to go green. We all want, floating windmills covering the North Sea. We want hydrogen in all our cars and all that stuff. But, that's a very, very good thought. But is it feasible? And the thing is that very few of these industries are sustainable unless they get some sort of government grant or guarantees, right? And then and I think this is potentially why the political winds are changing a little bit, because, it's different from what we all want to what we're actually willing to pay for. And I have this, I raised this question quite a few times. And actually, when we last saw each other, I was going to ask that question in the room, but I never got the chance to it. There were just too many people there. But the question is, how many times when you book an airline ticket, do you tick to pay an extra euro or €5, whatever it is, to have a carbon neutral flight? So, prior to this thing that we both attended, I actually asked ChatGPT, and it's less than 3% of the tickets purchased that actually tick this box. And actually, I think that 3% is where it's a company policy. It's not when, if you are going to go down to Majorca, basically to put on your swim trunks and drink beer, you don't push that button. Nobody does. And I think you can relate this to what we're seeing right now, is that if we want, and this is probably a bit Norway-centric, but if we want windmills across the North Sea, we also have to accept to pay, 3 krona per kilowatt hour of electricity, which we don't really want to. And
I think the Norway price signals that people don't really want to pay for it.
Yes, and I think everybody probably said yes to that. At least if you live in these parts of the world, again, Norway-centric, but I think it's going to be pretty funny when the people of the north realize that their prices are going up, because the demand in the southern Norway is probably going to be affected by the fact that we don't pay more than 50 øre per kilowatt hour.
Definitely. So if an investor is tuning in to this conversation and he wants exposure to the tanker market and he has several options, fewer than before actually, what is the framework to use? Is it just that Frontline, biggest, most levered, the upside is the biggest, but to maneuver and make small or unique trades, it's a benefit to be a smaller company? Is it that simple, or how should an investor sort of look at the opportunities?
Well, I think kind of, and of course I'm going to anger a lot of other, but if you want a pure play crude exposure, you only have like Okeanis, DHT, and Frontline of the listed companies. I'd say that gives you, that you want to have a bet in oil. If you want refined products, Scorpio, Hafnia, Torm, whatever, different business models. So I think, but I can only speak on behalf of Frontline. I think what Frontline has, which maybe some of the other companies have as well, but it's probably not as well communicated then, is that we are an investment vehicle for shareholders. We have the major shareholder, who Mr. Fredriksen, who is, and if you think about it, he's actually, he could have been organized like a family firm, family office, and it is to some extent organized like a family office. But all the key investments are stock-listed vehicles, not private vehicles. And why is it stock-listed vehicles? It's so messy. It's kind of the demand for transparency, the demand for governance, the demand from investors and so forth. Well, it's an extremely efficient way to market your portfolio whenever you will. You can literally just look at the stock exchange, and it also put the transparency there, so that everything that happens in the companies that you own a major share of is very transparent. And I've said it many times, but Frontline is shareholder driven. It's not management driven. It's shareholder driven. So it means that whatever we do it to optimize the return the shareholder can have on the share. But one has to remember, we are a vehicle for people that want to invest in tankers. So it means that you also have to accept the volatility of the tanker market. And mind you, we also try to stay spot exposed. So, Øystein loved, the Flex story. Ole loves the SFL Corp story. But, with those companies, you sleep well at night. Frontline, you should not sleep. Well, hopefully you sleep because you've made a lot of money. But, you should stay on your toes. So basically, our proposition to the market is to offer you a similar excitement as investing in a ship itself. Because it's a straight-through processing of oil or tanker revenues, straight through with, of course, some cost has to be covered, and then it ends up being dividend.
Can we talk about one concept? Because I think you put on the perfect intro, being a price taker versus a price maker. Because if you could compare earnings, we didn't mention Hunter, but some companies are either, index linked or have other perspectives. So, can you explain for people, the difference between being just a price taker and a price maker, and how that trickles down to, Frontline earnings versus other peers?
Yeah, no, that's it's a complicated thing to explain. But if you mean a price maker or taker from the freight perspective. Well, first of all, just to cover Hunter. Hunter is probably the most levered tanker card you can play. And I forgot to mention them actually. The business model is not bad. It's but they're completely index kind of reliant. So if you have a bullish bet on the tanker market, you're going to get it, instantly reflected in how the index performs, and that's going to directly affect their cash flow and how much they make. So but there is no science in that, to put it that way. With regards to the price taker or the price maker, I think it's a little bit portfolio discussion actually. So Frontline has the largest spot trading VLCC fleet in the world. We're probably amounting to around 10 to 12% of spot trading cargoes in the world. That is an advantage when we have a strong market, because then we're the price maker. But it's not necessarily an advantage when we have a marginal or weak market, because then we become price takers. And you also lose some of the flexibility in how you trade the ships if the market is marginal, to put it that way. Because there is a limited amount of volume that will kind of come out of US, Brazil, Guyana, Europe, West Africa, and so forth. The kind of close to 70% of the oil that takes to water from trading is from the Middle East. and coming out of the various Middle East exporters. And when you have a large fleet, you simply have to have a certain weight in that market. You have to have a certain amount of ships in that market, because it's never going to be such that you can have 100% market share of the Atlantic. The Atlantic is a limited market. And just to give you some figures, so on a monthly basis, there is probably somewhere between 25 and 30 VLCC cargoes out of US Gulf. So it's, that's it, kind of. Some periods could be 21, some periods it could be 35, but that is it. And then if you look at kind of how the market structure is on and I'm only talking large tankers now, VLCC, but just to make it easier. If you look at how the fleet is set up as well, of the some 10 to 12 million barrels of oil that are exported every day on the VLCC, that is put onto vessels owned by oil majors or controlled by oil majors, controlled by traders, controlled by kind of other third parties, or kind of a part of what we refer to as China Inc. So it's basically either controlled by the Chinese importers or by a couple of pools that tend to be friendly to kind of Chinese freight needs. If you put all those together, that's about 42% of the fleet. So it's a material market share. And then you have the other portion, which around 38% is owners and pools. And so actually the pure owners, the ones like Frontline who are going for gold every time they fix, that's a limited amount. So we kind of, comparing us to 2004, for instance, I think the ratio was 70% ship owners and 30% others. So it means that kind of there has been over time a bit of a power shift in price making in the market, meaning are you a price maker or a price taker? It's so dependent on how tight the market is. Then back to the size of the fleet. So I mentioned kind of there is a limited amount of, say, Atlantic basin cargoes. Frontline, just because of its sheer size, needs to have a little bit of a bigger market weight in the Middle East. That's not a problem now, because freight rates are actually higher in the Middle East than they are out of Brazil or out of US Gulf. But in a more marginal market, which is regretfully the period we've been through for the last couple of years, you are basically forced to have an overweight in the Middle East market, which has been relatively weaker than, say, this kind of big long haul runs out of Atlantic Basin. And this is where, just use Okeanis as an example. If we fix one kind of premium loading in the US Gulf, it's 3% of our VLCC revenue. If they do one, it's 13% of their VLCC revenue. So this is where kind of being small and nimble from a TCE perspective has actually been somewhat an advantage. But Frontline, we're actually not going for, well, of course we're part of that game, we're going for that game, but I mentioned it, we're actually here for our shareholders. And I said it jokingly, some of our shareholders don't care if we have ships or even space shuttles, as long as we make a lot of money on it. And this is kind of the theory, at least, and hopefully we can show it in practice. With this amount of days that we have on the water, 30,000 annually, when you cross a certain threshold where you covered all your costs, so basically everything above that is just pure profit. That's just around 25,000 or 26,000 to make it easy, dollars per day. Everything else is just a volume game. How many ships do you actually have that can churn and make this amount of money that you can then deliver to your shareholders?
Great summary. So, that's a fascinating perspective, but can you also, what's the most bullish scenario and bearish? And if you look at, the trade routes being set there, because if there can come arbitration or shifting trading patterns, is that a clear picture going into 2026, what the bull case would be and the bear case, given, you know, the trade routes getting longer? Because it's like a tipping point, I guess, you know, if...
Yeah, no, it's a little bit difficult, but let me try and put it this way. Everything is much easier to see in hindsight, strangely enough. So when Russia invaded Ukraine, you know, that was actually a massive black swan. People tend to forget it because you've gotten used to this now. But it was a massive black swan. And we actually saw, you know, these large shifts in trading patterns. Russia did not have any kind of meaningful market share of the Asian market prior to this happening and prior to the sanctions coming into force. Then all of a sudden you end up having a substantial market for oil coming out of Russia, going all the way to Asia and actually taking a significant market share, basically taking it away from other kind of exporting areas. This is actually the bear scenario for a VLCC owner. It's a bull scenario for a private owner that is willing to do price cap oil. And this is why, you know, the private owners that have, you know, kind of done the price cap oil, they've actually had the screaming bull market ever since 2022. Whilst the rest of us who have stayed in the compliant trade, yes, we've had, you know, an improved market in Aframaxes and Suezmaxes. We've actually been penalized on the VLCC side due to lack of ton miles, because this Asian market share that's been filled up with Russian crude, has come at a cost for US, Brazil, West Africa, Guyana for that sake, even North Sea oil that used to be arbing into Asia. The Atlantic Basin oils have been trading locally as in going into Europe to replace the lack of Russian crude. Or the shortfall of Russian crude. So I think kind of this whole kind of a movement of how molecules have moved or are being moved has actually been very close to the bear scenario, because of course, hadn't there been any sanction on oil, I think actually we would have seen the market share in Asia, or say, hadn't Russia invaded Ukraine, I think is a better way to start. You know, kind of, we've seen a normalization of the you know, the growth of oil demand is all happening in Asia. You know, the oil production growth has actually, you know, most of it happened in Atlantic Basin, particularly Brazil and Guyana recently. And the natural home for that oil would just be Asia. And you get this long haul kind of ton miles. So I think kind of the bear scenario is probably where we have been all up till this summer. The bull scenario is then that this just continues. How likely that is, it's very difficult to gauge. But if this just continues, if this is more than a kind of a 2, 3, 4 months kind of where you're up and seeing the sun, or if it's a kind of long-term fundamental change, that's impossible to call, but that's the bull scenario. I think the bear scenario is that we just fall back again. So the bear scenario is China fully going back to, you know, even China has held back on Russian molecules. I think probably triggered by Lukoil and Rosneft getting sanctioned. India has also changed, you know, the way they source their crude. Why is probably a little bit short term, because I think it's political. I think it's towards you know, trying to do a trade deal with US for both countries, but probably more so for India. But how this is unwound or whatever the expression is, you know, that's going to be kind of the interesting part here, because the oil is not going to go away. You know, I think last I checked, you know, Urals, which is the Russian oil grade, is trading at a discount to Brent by $20 or something. It's cheap oil, and cheap oil tends to find a home. So, but right now, you know, this kind of whole trade has stalled a little bit, and I'm uncertain of the longevity in that. But I also have to, I think, to say in the same sentence, it's also, we've seen a tremendous increase in the complexity of trading sanctioned oil. Basically, both India and China are in some ways self-sanctioning. They're not accepting OPEC sanctioned vessels to discharge in their ports. India, also EU sanctioned, it's more or less the same. It's more like a technicality, but this fact has made kind of the complexity around, just imagine, you lift the oil from Russia on a sanctioned vessel, you take it, somewhere near India, then you need to to move the oil into a non-sanctioned vessel in order to take it into China, to an Indian terminal. And same goes for China. You take Iranian crude, you ship it all to Malaysia, then you need to reload it into another tanker that is not sanctioned, and then take it to China. And mind you, kind of the scope or the targeting of these various sanctioning bodies like OFAC and EU, they just continue to pound, right? So the minute they see, an illicit STS operation, they will sanction the vessel that was in contact with the sanctioned one. So this complexity is adding, of course, to well, it's good for us, but it's adding to kind of the ton miles that's involved in shipping of oil.
Makes sense. So one question on the supply side, Sea Tankers, John Fredrickson has ordered several VLCCs. Usually he knows what to do with his money. Is it, too far-fetched to say that when these ships comes, they can end up in Frontline, or is that,
There is no kind of equal sign between what he does on his private side and what ends up at Frontline. And actually, it's been a long while since Frontline has actually bought vessels from Sea Tankers. He's had vessels delivered already. Some have been sold, some are on long-term time charter. He's an asset player, right? So if you walk up to him and say, I'll pay you 135 million for that delivery next fall, he's likely to say yes. Here you go. This is kind of the big boys game, because if you have a good name and you have a kind of a long track record with the shipyards, you can literally order vessels, with a handshake in your good name, right? Potentially you need to put down 5% on signing or 10%. But imagine the leverage play you're doing. If you put down, $10 to $15 million on a $150 million bet, and then if you can suddenly get $50 million appreciation on that asset. So this is the business he's in, and of course some of the other kind of large names that have been visiting shipyards for the last couple of years. But it could be strategically as well that Frontline sees it's suitable or the right thing to do to at least make him an offer for some of these hulls. But it's of course something I'm not going to divulge into here on the call with you.
Yeah, and it's not like an option play per se that you have this opportunity. If it makes sense for both parties, you sort of tend to do it.
I think why Frontline hasn't gone to the yards ourselves, because that would have been an option too, is that there's been a discrepancy between what the market is willing to pay us, what an asset costs. So that's already something to bridge, right? But that's an asset on the water. But then to take that and go and commit yourself to an asset where you won't see any cash flow, in 2 years' time, we don't think that's kind of a sound investment on behalf of our investors. So the resale market, already difficult to defend. We managed to defend it when we did the Euronow transaction. We needed a break even, we needed a freight rates around $50,000 per day to make that a sound investment. But from there to go and order something where you don't get any cash flow in 2 years' time, that was a bit of a big ask, and hence why we didn't really want to do that. The resale market, we could have accessed that, in the interim since we last did, but that market is not particularly liquid. It's been extremely illiquid, to be quite honest. I think kind of the last, transaction we saw was probably International Seaways, but prior to that, this was DHT back in May. So imagine that, this is a market, 800 vessels in the fleet and all that stuff, and you have 2 transactions in the span of 6 months. So it's not it hasn't really been something we've been addressing.
If you had to order new ships, where would you order them from? Is it China more and more? Is that just a general trend, trumping everything, or with geopolitics that's also a play?
No, but I think it's also a question who is offering, contracts to build VLCCs or Suezmaxes. Aframaxes, or LR2s, quoted Aframaxes. There's probably a bit of a wider offering. The offering is less on Suezmaxes, but then on the big ships, it's even less. Because if you're a Korean shipyard, you would much rather build a container ship or a LNG carrier, because the margins are much higher. So I think it's not like strategically you want to build them in China. It's where the offering is, and mind you, the quality of Chinese ships, I think it's proven that these vessels are extremely well built. So it's not really that. I think why you would be hesitant to engage on the China side is more political rather than the tradability of the vessel.
Perfect. So time is flying, Lars, and I have some other questions. So let's switch gears, and you can decide how much you want to dive into it. But so now we're going to talk about management perspectives. So maybe the answers will be shorter, I just assume, because maybe you don't like talking about that as much. But if you have to be honest, hardest part of being a CEO of Frontline, now you've been in it for several years. If you have to bring us into the the real side, is it hard or is it just fun and exciting? And
no, I think I'm a traveling salesman and an ambassador. So this is probably different from business to business. If you ask, like a proper CEO, the CEO of Equinor or something, or some Aker company or something that has like 3,000 employees to handle, I think their days are completely different than mine. We are a completely flat organization. I would actually compare it, or I've compared it when I've been asked the same questions before. It's almost like being the boss of a law firm. Everybody are professionals. And actually most people know more about shipping than I do. And we have kind of very good teams. For those who don't know Frontline, we outsource absolutely everything that we don't deem core. So it means that we're about 50 to 55 souls that solely work for Frontline. I know them all. I'm actually traveling to London to attend the Christmas lunch for the team who's sitting in London on the accounting side on Wednesday. So their Christmas lunch, so I think kind of people management is more for me to understand, because our team is very good at raising questions, room for improvements, and so forth. Is basically just to channel that so that we actually do it. We have a joke in the office that you'll find HR on the 6th floor. There is no 6th floor. So of course we keep up with the regulatory requirements and all that stuff, but I think it's a symbolic of how we're quite a professional organization, and my job is basically just to, if I can, make their workday easier, and then run around and fly the Frontline flag.
This is more like a Navy SEAL operation where motivation is expected to come from within.
100%. No, but it's more than that, because we are not an organization that's perfectly fit for internships, and we have a few interns every year, and when I have my talk with them, I say it, hand on heart. Our organization is not set up to support you guys, because we simply don't have the time. And if you think you've been thrown into the deep end before, now you are thrown into the deep end. And it's how you float that will tell us whether if you fit into organization or not. And every cycle, we actually do find floaters that are swimming this pool of not having any direction from anybody. But it also gives you, not to talk about leadership philosophy, but making people responsible is the biggest motivation of them all, I believe. If you know that you're responsible and you have the freedom to solve a task or a challenge, the point is to solve it. I don't care how you achieve, or how you do it. Of course, within reason. I think that's a great motivator.
So a dilemma. Do you feel like you're closer to, the Andy Grove perspective that, only the paranoid survive running a company, or are you more in the Warren Buffett philosophy that you should tap dance into work every day because this is just so much fun?
I think there must be somewhere in the middle there, right? In shipping, you need to be paranoid all the time. But I think you can't let paranoia get to you. And I think kind of where we started on 2025, and a lot started with the inauguration of Donald Trump. And I think what's really important, and I say it, my wife and kids hates it, but breathe through your nose, and not to get too involved in just kind of stay with the business. Do not get involved in there is and I might have said this before, but I'm going to say it again because it's one of the best quotes I've seen, and it was when Norway were hosting the Winter Olympics at Lillehammer, and I believe Gerhard Heiberg was the boss. And the journalist asked him, so are you sleeping, how are you sleeping at night? What if there is no snow? And he was like, well, that is one of the things I do not think about whatsoever, to be quite honest, because we plan for no snow, but whether if there is snow or no snow, I can't control. So why spend a lot of time worrying about it? And I think there's a parallel there. So as 25, we embarked on 2025 and literally got new things thrown into at least our business area every other week. Well, we don't know how it's going to play out. We don't know whether if it's good or bad, or if it's actually going to get enforced. So don't spend too much time thinking about it. Think about the things that you actually can control. Yeah. And optimize there.
Yeah, so true. Control what you can control. That's basically a perfect principle. We talked about it before we went on record here. Can you just name one new innovation or technology you want to implement in 2026? AI is high on the agenda. I mean, there hasn't to be one specific project, but do you see anything exciting that, people are tuning in, who also maybe are dabbling with different products that they want to implement in the shipping industry? Can you just give them a taste, running this big organization, as running a big fleet, at least, how the potential is here?
No, I think we touched upon it. So I think AI is probably the new change, I would say, to us, but not as it's going to change our industry. It's going to improve how our industry works, and I think it's we do discuss it quite a lot in the office, and it's all these snippets of efficiency gains that you're able to get, and it could be from if I'm going to type, a report from a meeting, you can do it in 20 seconds. Or if it's analyzing kind of complex data coming out of, say, we've had a valve that broke on a ship, and of course you need to figure out why did it broke. Do we have more of the same make? Can this be an issue for other vessels as well? And then you get reports which are like 200 page long, but then you have previous reports as well, and then you can just feed this to the AI animal, and it will help you make it much easier to find kind of information that is basically dug down in a lot of documentation. So I think this is Frontline's kind of embarked on a digitalization kind of strategy years before I became the CEO, and that's been evolving ever since. We're actually doing it more for efficiency gains, as in energy efficiency gains, to be much smarter on how we trade the ships and so forth. I think adding AI to this, AI is actually nothing more than like an algorithm on drugs, right? So we've used algorithms and quant programming already, but now you're just getting that really on speed, and I think that's and I'm actually looking forward to that, to see when we get better at understanding what this computing power can do for us as a company to make us even leaner, even meaner, and more efficient. And who knows, maybe it enables us to return more money to the shareholders.
Yeah, because that's deeply into the culture, right? Being as lean as possible. So that's fascinating. If you can, be even more in the future. So, a lot of young people tuning in, you started your career in Singapore, in London, live the life over again. Would you be based in Middle East? Where should young people go to be there, where the action is, and to take that knowledge back to Norway if they want to become, a maritime professional?
Yeah, no, well, first of all, you need to go outside Norway. You need to see it where the action is. I think it's still so that Asia is important. I go to Dubai frequently. It's I think it's a difficult hub to get an overview over, I think, but that could be just because I'm old. But it's still so that Singapore is a maritime hub in Southeast Asia, and commercially, one will find that most of, for instance, Chinese refiners and traders and owners, for that sake, have commercial representation in Singapore, and the commercial decisions on a day-to-day basis is actually happening in Singapore. But I think the key is you need to get out of Norway, because it gives you a perfect way to turn around and look back at Norway, and then you understand what's great and also what Norway can work on. But if you're going to be in shipping, you should spend some years abroad. There was I'm not going to mention his name, but he's a well-known investor in Oslo or in Norway, who said, why stay in Norway to be a cod when you can go abroad to become a shark?
That's a fantastic quote. Yeah. And, meeting young people, myself and you, in a much bigger degree, of course, asking into question, I want to become, the next Mr. John Fredrickson or just the next shipping executive. I mean, all those histories, and you, of course, know him much more personally. Maybe just it's a testament that you have to be willing to go outside your comfort zone, go abroad. Maybe that's just as easy as that. Don't have those aspirations if you don't know what it actually takes.
Yeah, and actually you'll find that, I think, if you look at the Greek model, to put it that way, you actually, there you've managed to have a generational shift to kind of Mr. Fredrickson's peers, to their sons and daughters, who are able to do it really, really well in shipping. But these guys have done it all from bottom up. And I think kind of in shipping, it's actually a craft. So if you're going to do like commercial shipping, there's lots of stuff you can do related to shipping, like legal kind of financing and technical and all that stuff. But a lot of kind of technical, operational, chartering, shipbroking, so forth. It's a craft, almost like being a plumber. And then you actually should start, somewhere where you learn the craft before you try to make decisions, utilizing the craft. And there you probably will find far more opportunities abroad than you'll find here in Norway. Potentially the technical side, Oslo is still a hub, and the qualifications you can gain from Trondheim and other universities. There is also then you have the oil industry, which is also related to shipping. There's a lot of parts of shipping that Frontline is not involved in, but where great skills are needed. But if you're going to be commercially oil or bulker or some of these things, you should start entry point at a low level function, but do it abroad.
Makes sense. If you can only read one newspaper or magazine every week, which one would it be?
The one I actually read the most is FT. FT is like DN, but with good journalists. But they also have lifestyle and travel and all that stuff, so it's actually quite nice to read on a weekend. But they also have journalists that actually write journalistic stuff, and it's has a global reach.
And last time I asked you for book recommendations, you were busy with the Euronav thing. People can tune into that. That was a deal in itself. We should not spend time on it. But you didn't have the time to read any books, way too busy. Is that still the case? Or how we have something to recommend people? It's Christmas soon. We need hard packages under the Christmas tree.
Yeah, no, I wish I had a good book. And I don't. I haven't really finished. Well, what was the last book I finished?
Saudi. You recommended a lot last time.
No, but I think the last book I finished was probably this summer, and it was one of Clive Cussler's kind of. It's like a crime novel, but Clive Cussler it's all happening on the oceans, and it's like a marine environment. So I love reading that during the summer. But I do have. A book that's on my to-do list, which is basically the head of the Norwegian National Fund. His basically interviews with the leaders of the stock-listed companies that the Norwegian oil fund is invested in. So I got that from my son to my birthday, and I started to open it, and it's actually quite interesting.
Perfect. So, just to summarize the conversation, we've been through different topics. How would you like to end it? Is there anything we can summarize? What are you most excited about going forward? How would you sort of, just share your summarized thoughts?
No, I think, it is still so that if we go back to the journey that Frontline embarked on in 2020, was a strong belief in this supply-driven or lack of supply-driven tank market. And I think that story still holds because, yes, we have a meaningful order book now, but we also have vessels have aged 5 years since, and they haven't disappeared. So we have like it's called in English, it's called a silver hair crisis, if you can call it that, So an aging of the general population of tankers. And this is just, it's just an increasing problem. And if you then believe that a vessel needs to be below 20 years to trade, then, our balance is actually looking quite okay. I think we've gotten confirmation that oil demand looks to grow going forward. But I think I'm going to answer the question that most listeners that have listened to you before are going to ask, and that's, have we sat down at the dinner table yet? And yes, I think we have. So, there is a kind of there is a starter, so we're eating into the starters now. But I think kind of just for those international listeners, if you go to dinner in Norway, you have the starters, then you have, of course, the main meal, and then you have dessert, then you have drinks, then you have the party, then you have an after party. So it's kind of, but we are sat down now, for sure.
This is not a 2-hour fine dining and then you head home.
No.
Perfect, Lars. Just one thing I want to add as well, because you're actually, you're on Twitter, you're posting some interesting data points as well. So we can expect them going forward as well. Once you see interesting data points, you actually share them with the audience.
Yes. Yeah, I try to do that, but it varies because I have a day job too. It's not always that I remember that the stuff I see and find interesting that I should share it, but I will try to improve on that.
Perfect, Lars. Thank you so much for taking the time. It was a pleasure as always, and good luck in next meeting in London.
Thank you.